Good afternoon, and it's a good afternoon indeed if you're a bull, because we are in for a very sizable rally, one of the largest that we have seen of late. In fact, we have been seeing that this is the longest rally that we have seen over the last 4 to 5 trading sessions within the last 2 to 3 months, because consecutively we have been on the gaining side, and today finally we broke out of important levels. 100-day moving average, for instance, on the Nifty 24,500 conquered quite easily. In fact, 700 and now 800 on the index as far as Nifty is concerned at the highest point of the day. 82,000 as far as Sensex is concerned, and important levels being broken even for the banking index. The outperformance today from the start was with small cap index, so that continues to do quite well. There's mid cap index also, which has moved into the green, even though the India VIX spiked on an intraday basis by 8%. The volatility seems to be on the positive side, if at all, because the market momentum has only gained further momentum in the second half of the trading session. It's been led by the IT names clearly. So TCS, one of your top gainers at the index level. Infosys also over 3% gain coming in, and then Titan, Dr. Reddy, L&T are the other gainers. But of course, it's Reliance as well, which is doing quite well. HDFC Bank is sitting at all-time high level. So today, a lot of things coming together for the Indian markets, and even from broader markets, big movers coming in, and even in the F&O universe. So when a BSE, for instance, is up, a CDSL is up, Angel One is up. So some of these stock market ancillaries are doing well, and some of the food delivery companies as well, because Zomato, for instance, as well as Swiggy, after that earnings has seen a massive upswing. Yesterday it was up 7% intraday. Today Swiggy was sitting with a gain of around 4-5% the last time I checked. So finally it does seem like, Aisha, that we have broken out of the range, but I don't want to be speaking too early.
Yeah, we'll get in our chartists actually to talk about exactly that and more. Of course, it is Swiggy and Zomato which are really catching your fancy right now. Zomato at an all-time high. It's about 300 rupees per share for the first time. CLSA has reiterated an outperform on Zomato, and now it's up the target all the way to 370 rupees. Not just that, they're saying that the gap between both Swiggy as well as Zomato persists, particularly because of QCOM. And they're saying that Zomato continues to maintain leadership and 81% larger in GOV. Other than that, of course, there's Divi's Labs as well. Novartis has failed to hold the hard drug generic version for them. The company, remember, had a CDMO contract with Novartis for this particular drug, so which is why you're seeing that dunk down on Divi's. Considering, this did have a fair amount of contribution to their revenues as well. In FY25, it stood at about 12.5%. For 26, the estimate was about 12%, and for 27, about almost 10 odd percent. Other than that, of course, there's Hyundai Motor as well. They've announced a price increase across all models come January 1st. The extent will be about 25,000 rupees per unit. Bank of America has initiated an underperform, though, with the target price of 1840. They're saying it's a good franchise. They see risk reward unfavorable, though, at the current levels. Stock fairly muted right now in trade. But Kunal, what's the market texture looking like to you?
Yeah, I think it's perfect for the markets. Did not expect this 300 plus pointer up move for the Nifty, at least on intraday basis. And this comes at a point where the Nifty is crossed back above its key moving averages, the 50-day moving average to be precise. I think that's the more important one, because Bank Nifty at one point was showing signs of strength. The IT indexes where I believe that the momentum has started off on an intraday basis. You've seen large cap IT stocks participating quite well, TCS, Infosys, and then followed by HCL, Tech Mahindra, etc. I think so. When you have such kind of a strong sector move led by two of the better performing sectors, the banking as well as the IT stocks, it's going to get gain a lot more confidence from the traders. Now, interestingly, the Bank Nifty is on the verge of breaking 54,000 mark. This will be a very big breakout for Bank Nifty, because post this level, we could be looking at least an 800 to 1,000 point further rally for the Bank Nifty, beyond this major resistance point.
Right. Naresh, IT seems to be leading today. Both TCS and Infosys back with a vengeance. Any IT trades, or you're still preferring the mid caps over large caps?
So it would be Infosys itself, and then it could be smaller names which have not rallied. So if you look at Infosys, the interesting part is we are back at 1950 odd levels. Now, this was the top in 2021, as well as 1950, 1980 has been the top in 2024 as well. So it could be a much bigger breakout if it sustains 1950. So the largest name, Infosys itself, looks interesting. And then maybe some names like Birlasoft, which are recovering, or LTI Mindtree, L&T Tech. Those could be the names which are still recovering from the lows and not yet into new all-time highs. So I would go with a buy on Infosys and a Vsoft.
Okay, point taken. So those are the top recommendations within the IT pack. But just taking stock of what's buzzing around as far as the broader market arena is concerned. On the losing side, there were names like Vodafone Idea, which were under pressure. Graphite was down. But on the gaining side, IGL is the one that one needs to watch out for. That certainly perked up quite a bit. Castrol India is doing quite well in the trading session, and Granules India too holding out quite okay. But we also have Gurmeet Chadha in the house. Gurmeet, hi, good to be speaking with you. Been a while. What's the sense in the market, and especially the financial market ancillaries? What explains the 11% plus move on, let's say, a BSE, a CDSL, CAMS, Angel One, all are firing away. Any specific news flow you believe today?
No, I think there were some concerns initially when SEBI came up with the regulations on FNO, on the number of expiries, and I think there was some bit of I would not say too much correction, but consolidation in those names. And I think the recent reports and brokerage reports suggest that there's not much happened as far as volumes go, and as far as the. So I think it's a bit of a catch up happening, that the regulatory changes may not dent the profitability too much. But we'll see how the earnings come. And a lot of these changes are also in a staggered manner. So the full impact probably may also take a little time to come. And I think the proof of the pudding is that, you have seen FIs withdraw $20 billion in 40-50 days. And the market is now just probably 5%, 6% down from the peak, which also tells you that, a lot of this movement of domestic savings to equity is very structural, and it's not just transactional just because the markets have done well. So I think it's a big shift. And Anisha, if you see, the largest bank in US is $3 trillion, which is JP Morgan. The largest asset management firm is 11-12 trillion dollar, Blackstone. Here it's just the opposite. So I think the capital market plays, obviously valuations are a bit of a stretch now at this price, but it's a good long term story to be in, as far as exchanges go, depositories goes, RTAs goes, like CAMS, etc.
Kunal, do you sense that one is going to get any opportunity to enter into these stocks, or will they continue this kind of run up, which they typically do, right? They move in a herd and they move almost double digit on one single day.
Yeah, it's possible that these stocks may continue to move up higher, and I think the best part about the move for many of these names, BSE, CDSL, is that this has been a very strong volume-backed move, because that's the aspect which you look out for. So these stocks, they have a tendency of giving breakouts. Volumes come in spurts, but then when volumes come in more consistent patterns, that's where we see the trends lasting for a prolonged duration of time. Even for, in fact, over the last 4-5 days or so, BSE as a stock was getting into a zone of consolidation. Today is where you've seen the volumes breaking out for BSE, which means that this could be a start of an up move. So I think I would probably believe that traders could look at a participation even from current levels. Of course, after such a kind of a strong 10% plus kind of an up move on a single day, you might want to size your positions quite aptly, but I think the trend should continue for these stocks on the upside.
Okay, almost a block, 12.25% higher for BSE, CDSL up 8.25%, Angel One as well. Almost knocking in on a 7% gain. We'll continue tracking these and more buzzing stocks, but for now, we're going to take a very quick break. Back to closing trades right here in ET now. Just taking stock of what the market has been up to 70 points higher, a solid 1% of a move, although the start wasn't quite the same. It started off much tempered, and from there you've seen a nice pickup. BSE, by the way, is now holding up 12% as we speak. Infosys has spiked up 3%. TCS holding up nearly 3% in trade. There's Titan, Dr. Reddy's, Wipro, M&M, Bajaj Finance, and of course Bharti as well. They're all supporting and giving the index that leg up. Of course, blue chips like an L&T, ICICI Bank, Reliance Industries, and HDFC Bank as well, holding up quite smartly. What's not looking good? Couple of these auto plays. Gurmeet, does it make any sense in looking or bottom fishing now for these autos after the recent spate of correction that's played out, or would you say avoid the sector right now because there's not much clarity on whether or not it's a slowdown, or is it just a very temporary lean phase?
No, I think we want to be selective here, Asha. So, for example, M&M, I think, had good numbers. The festive season has been very well. The new EV launch has got very good reviews. Their market share in SUVs now is almost back at 20%. by volume, and by value a little over 20%. Tractor sales also number seems to be holding up, with rural recovery showing early signs. We'll have to probably watch for. They've actually upped the guidance. They've actually added market share there as well. And even the light commercial vehicle segments and the railway segments, the freight segment continues to do well. So that could be a preferred play in four wheelers. Tata Motors, maybe we'll have to wait for JLR numbers to stabilize more. That's more than 70% of the overall numbers. Maybe with the new launch, new logo we've seen, I don't know, the reviews are quite mixed right now. And there have been a lot of supply issues. But as far as their top selling model, which is Range Rover, Sport, and Defender, that order book continues to be pretty healthy. In ancillaries, I think there are select opportunities. We've seen a sharp movement up in the likes of Uno Minda, Sandhar Technology, some of the other names as well. So here you can maybe pick and choose, because a lot of IC engine parts, especially with Ukraine getting disrupted, they are seeing a lot of operating leverage playing out. A lot of them are functioning at 90-95% capacity. So I think there's a little more juice there rather than pure play, OEMs, and maybe selectively some two-wheeler names, because the two-wheeler numbers are looking good in the festive season. So maybe a TVS in two-wheeler, M&M in OEMs, and a couple of names in auto.
Point taken. So that's the view coming in on auto angs, but definitely that clarification coming today from Bajaj Auto that they've taken the price cut only in certain variants and not the higher end of the things. And Mr. Rakesh Sharma was with us yesterday talking about how they're focusing on the premiumization and the upper end of their range and not really the lower end. The stock is recovering a bit. In the last few minutes, there has been a bit of a perk up on L&T as well, and even Ultratech Cement at that. Kunal, what's the view on L&T? Do you think this is one of those stocks which will participate in the rally in a big way, or this is going to be one of those slow movers and underperform a bit?
No, I think the stock should participate. In fact, it's done pretty well for itself in the last 3-4 weeks. There was a point when the markets made a double bottom. We broke below the 23,500 levels. In that sell-off, or the second round of sell-off, the second 1,000 point for the index, L&T had actually made a higher low for itself. Now, on the way up, when the markets got into a recovery, L&T was one of the first stocks to come back above its 200-day moving average, which is a very critical technical aspect for stock prices. And then now the stock is on the verge of breaking past above its lifetime high level. So that's a classical recovery for L&T, showing signs of divergence, positive divergence first with respect to the index, and then starting to get back into an outperforming mode. My belief is that the stock should be able to scale past about the 4,000 levels potentially in the next 1 to 2 months, looking at the way the momentum has surged, the volume patterns, as well as the relative outperformance for L&T.
Okay, that's the take coming in on L&T. I don't know if we have that soundbite from Bajaj Auto. Maybe we should just pull it up and listen in.
In the festive period, and preceding the festive period, because people start to offer Christmas sales way back in October, and therefore even the festive period starts to the onset, at least in terms of communication and promotions, starts very early, and that is the reason why sales advance in this year's case into October, and November is a low and December is a bit of a low, where we do most of the destocking happens. Of course, there is because the consumer starts to expect it, and there is a general milieu of promotions and discount, which leads to some kind of advancement. But having said that, we ourselves for the last few years have been taking an approach of staying away from this, because at least in the bottom half, where this was like acute, it's a bloodbath. It becomes like a red ocean, and we always know that the cage will get rattled, the birds will pitter around, and after the season, everyone will get back to similar sort of positions. So our own corporate strategy has been to be very, very selective about it.
Selective as far as Bajaj Auto strategy is concerned. The market has come off a bit in the sense we are 100 points off the highest point of the day, but holding on to the 24,700 mark, so maybe not going towards the 25,000 in a hurry, taking its own sweet time before it does that. Gurmeet, the couple of stocks that we are watching out today are from those food delivery services. Swiggy of course has been doing well since its earnings. Zomato hitting the 300 rupees mark. More value on the table, or do you think now it's Swiggy which is available at a size sizable discount to Zomato and makes for a better bet within the two?
I think a large part of the catch-up probably is taking place because, Swiggy came at almost, 90,000 crore, 1 lakh crore valuation. And Zomato at that point of time was about 2.4. So there's more than 50% discount. I think a bit of catch-up has happened. It's up more than 50% since listing. And, but I think that some premium, Blinkit may sustain. So if you see the average order value of Blinkit, that's double both Swiggy and Zepto, as well as Big Basket. The number of orders on Blinkit is now upwards of 10 lakhs. For Swiggy and others, it's again almost 50-60%. So I think some bit of premium would remain. So maybe we are overweight Zomato in our portfolio, more than 3% in our portfolio. And Swiggy, we actually did more pre-IPO for our clients, not in the PMS format, but others. So that's played out well. So maybe 70-30 in that ratio just to ensure. But in this sector, usually in quick commerce, e-commerce, the winner takes all. So you have to bet on one guy actually dominating, and once the market share crosses 65%, it becomes very difficult for the number two, number three to catch up. So I think while it's difficult to say as of now, I think Zomato has a higher probability of dominating this space.
In fact, that's exactly the same sentiment that Samir Aror from Helios Capital as well voiced this morning. He's pretty bullish on the entire platform space, not just Zomato, but Swiggy, Paytm, as well as PB Fintech is something that he's bullish on.
Where the real money has been made this year in new names is all the three platform, whatever you want to call these companies, are now four: Zomato, Swiggy, Paytm, and Policy Bazaar. All of them we have meaningful, and we bought them at the right time. And like Paytm was the most difficult because it fell, I think 50-60%, and everybody sold. Not every, but quite a few sold. We didn't sell, we added, and now we are up some 80-100% in that. So some of these platform type equivalent, or whatever you call these names, have been our big contributors this year.
Well, let's take a very quick break, but here's a programming note. The 10th edition of India Economic Conclave, we're going to be seeing a whole host of speakers from across the sector speaking about various topics that will help India fast track to top 3, which is the theme of the conclave this time. We've got more than 50 plus speakers who will be sharing their thoughts on the stage of IEC. Jim O'Neill, who's a globally renowned economist and is celebrated for coining the BRICS acronym, a visionary strategist. He's profoundly influenced global economic policy and investment strategies. Jim O'Neill continues to shape discussions on emerging markets, sustainable growth, and the future of global economic leadership as well.
So far this decade, partly because of China's challenges, India is already the second largest marginal contributor to global growth after the US, and it's on reasonable course for becoming the third largest sometime in the next decade, which of course was one of the many projections that made the BRIC acronym. When I come to the Times Network India Economic Conclave, I'm looking forward to discussing the structural challenges that India still needs to try and do more on to make sure it is guaranteed that India will become the third largest economy in the world in the next decade or so.
Not only Jim O'Neill, but Randy Zuckerberg, the CEO of Zuckerberg Media, will also be speaking at the IEC on how artificial intelligence will change the future of humanity. She has long been a pioneer in both technology as well as media. Welcome back. Well, a bit of a fall from the highest point of the trading session, almost 200-250 points. Actually, perhaps it's a 3 p.m. move which is reversing right now. Kunal, what do you make of it? It looked like picture perfect as you called it, but it's getting a bit undone right now.
Yeah, it's getting a bit undone, but the larger cap names where we've seen the move, for example, the likes of IT stocks, etc., the banking names, I think the move is sustaining over there. Maybe I think this could just be an intraday dip because of the expectations tomorrow, in terms of the policy meet. But I believe that we should settle back into a uptick move. So what we've done is we've broken past about 24,500 mark, and that was a huge hurdle or a resistance for the Nifty. In over the last 4 or 5 days, there have been many attempts for the index to break past about those levels comfortably. We've managed to breach those levels intraday, but we're not close about those levels of 24,500. So today's move, even after the intraday correction for the Nifty, we should be able to close about 24,500 mark. That itself indicates that the floor for the index has moved up higher, and we could be looking at a shift of range from 24,000, 24,500. We should be looking at now 24,500 as a base and 25,000, 24,800 as a resistance on the upside.
Okay, that's that on the Nifty, getting a little choppy out there. Let's welcome on board Rajat Sharma as well. Rajat, hi, afternoon. Good to have you on the show. How is it that you're feeling about the market? Any opportunities that are propping up?
Hi, good afternoon, Raisha. Opportunities, yes, there's always opportunities. But how I'm feeling about the market since morning is because I've been in and out of office, and it's been a very crazy day. It's like the markets were flattish to negative. Then at one point there was some 300 points up, and now I believe they're like 90 points. Like they've fallen a lot. So I don't know. But anyways, that said, I don't track markets intraday. But it's an unusual day. I think traders could answer that better. How I'm feeling about the markets in general is I'm fairly positive that we're unlikely to fall. And I said this last time when markets were falling, a lot of people wrote off the market and said, this is it, go short on the market, sell your holdings. And at that time also I said that I doubt if this fall is sustainable. I think we will probably bounce back. I didn't expect it to bounce back so sharply, and the reason was that at that time also I said interest rates are at an all-time high. So whenever there is some news around expectation for cutting interest rates, or right now there's talk that tomorrow maybe interest rates will be status quo, but there could be some reduction in CRR. It's already at 4.85. So I don't know, although I don't think we need more liquidity in the system. FIIs have been consistently selling. I said last time, I don't know how much more they can sell. Eventually they have to come back. So any positive development there, them coming back into India, could take these markets higher. So I'm very positive. The only thing that's a worry for me is this quarter, which is when January you start getting the results. The results have to be good. So if the results are not very good, or even average or bad, at least the way they were last quarter, then that could be a dampener. Other than that, so I think what I'm looking out for in terms of cues is the results for this quarter. It's a festive season, and that's what I'm looking at. I'm fairly positive on the market, sticking to large caps, the names that I've already suggested on your show many times, the likes of Infosys and ITC and HUL, and those are the stocks that I'm buying more of. We've added a few smaller companies, which I cannot discuss right now.
Oh, no, we appreciate that. Not looking to get those names at the moment. But Naresh, wanted to get a better sense from you regarding a couple of stocks which have been doing quite well this week so far. Z Entertainment up 15% this week. You also have IGL, which is up almost 20%. Further upside or time to book profits?
So Z could be a surprise given the fact the stock has corrected all the way from 350 where it peaked out back in 2021 all the way down to 2020 lows. And now we are seeing a recovery. There was another corporate action. And if this continues, it could surprise on the upside. So if somebody's already bought it at current levels, one could keep a trailing stop loss. The next target would be 165, 170 possibly. IGL, again, the stock went all the way back to 2020 lows and has started bouncing back. It's now coming close to filling the gap. So it should be a time to book some profits. 380 to 400, which was the gap down, would be tough to sustain. So for now, this is a band where you want to be booking profits and waiting it out.
Okay, that's the take coming in right now on some of those buzzing names. Can't, of course, get your eyes off from some of those market-related themes. BSE, CDSL, Angel One, they're all holding up well. Zomato up 5% in trade right now. And technology is the one which is really taking leadership. TCS, Infosys, Wipro, all looking good. ICICI Bank has actually sprung up quite nicely today, about 1.5% higher, and it's even overtaken HDFC Bank in terms of a move today. Reliance a lot more tempered, it's less than 1% higher, and even L&T has fizzled off from the top of the day. Kunal, stack up HDFC Bank and ICICI Bank, and where is it that you would take fresh positions if you had to?
So I'll be more confident on HDFC Bank, of course, because that stock has been an underperformer. ICICI Bank, yes, the stock has moved back towards or closing towards the live highs. 1362, I think, or thereabouts, is the previous high for ICICI Bank. It's off by a margin of 25-30 odd points from those levels. But my belief is that in this leg of up move, HDFC Bank has found its mojo back again, both in terms of volumes, in terms of momentum, in terms of the correlation, which is the bigger aspect when we look at this in terms of price performance on a relative basis. Because at a point from 2020, 21 to be precise, when the bank Nifty was sub 40,000 levels and the Nifty was sub 20,000 mark, from there on HDFC Bank has been at a similar point, 1790 thereabouts, 1750 thereabouts for HDFC Bank. So the stock is trying to not just play a catch up, but it's also trying to play a potential cover up of a huge underperformance which has lasted for the last 3.5 odd years for HDFC Bank. So I think in that aspect, the move for HDFC Bank could be a lot more stronger this time around as compared to a relative comparison with ICICI Bank.
Okay, point taken. So that's the view coming in on some of these private sector banks. Just take a look at what's happening in the markets right now and which are those big contributors on the upside. It's Infosys, ICICI Bank, TCS, L&T, while on the losing side, NTPC, Divi's Lab, Bajaj Auto, they are coming a bit under pressure. Taking stock of some of the other individual names at that as well. Naresh, from the Pharma pack, what looks the weakest and what looks the strongest?
These names which recently topped out is Aurobindo Pharma, which looks a little weak, has corrected a lot. You have Lupin, which is trying to create a topping out formation. Sun Pharma has paused. Names like Dr. Reddy's look okay because that has not rallied much and is on the lower band. But overall, looks like a pause in a lot of pharma names, and also the fact they've already run up quite a bit. So out here, Auro Pharma is one which would be weak.
Okay, point taken. So that's the view coming in on the pharma sector. Rajat, what's your take on pharma?
I've discussed this before. My take has been Laurus Lab. That's a stock we added a few months back. I've said that on your show. It was around 460, 470 that time. And, the reason was simple. The company looked really overvalued because they did a lot of capex, about 2,600 crore of capex in the last 2 years. And what they're trying to develop is their CDMO business and their biotechnology business. So that bit of the pie is what they're trying to expand. And I think they'll see the fruits of that capex they've done in those two sectors, because those are the two sectors which, so maybe they were forward thinking to that extent. But personally, I think it could still run up around 10 to 15% from here over the next 6 to 8 months, 1 year. Obviously, it's very difficult to predict this, what happens. It's all market driven. It's how overall market performs. But what I'm trying to say is it could fall less than the market and outperform the market on the upside. So Laurus Lab would be my top pick in the pharma space.
Okay, well, a lot of political action as well here in Mumbai. After over a week of political suspense, it's Devendra Fadnavis who is set to take oath as the Chief Minister of Maharashtra. Mumbai's Azad Maidan has been gearing up to host the ceremony where political bigwigs, right from PM Modi to Chief Ministers of NDA ruled states, several celebrities and industrialists are all likely to be in attendance. In fact, we've got Times Network's Rucha and Shweta bringing us the latest on this.
All set to host a historic oath ceremony of the new Chief Minister of Maharashtra and the two Deputy Chief Ministers of Maharashtra, for which Prime Minister Narendra Modi is also coming to Mumbai's Azad Maidan, for which the huge arrangements are being done by BMC, Maharashtra State Police, Mumbai Traffic Police and all the other agencies. There are 8 routes given to enter the Azad Maidan, out of which one gate is specially reserved for the Prime Minister Narendra Modi. He will be arriving at the Mumbai Chhatrapati Shivaji Maharaj International Airport by 4:30 p.m. from which he will board INS Vikrant aircraft to reach CSMT and then Azad Maidan. Prime Minister's presence here is very important for the Bharatiya Janata Party in Maharashtra as well as in Mumbai. Every agency, it may be the CRPF, SRPF, Mumbai Police, Mumbai Traffic Police and all other agencies, including the Brihan Mumbai Municipal Corporation is making sure that everything is on point and there are no complications in terms of security. Chief Secretary of Maharashtra, Sujata Sonik, had just visited here, and she also made sure that the inspections before the Prime Minister come here and all the other ministers come here is done. Where I'm present, I'll quickly give you a brief about it. This is near Sagar Bungalow, where hectic parleys are going on. In fact, several meetings have been lined up. Several MLAs are also coming congratulating Devendra Fadnavis. And today, it's going to be one of the most crucial day. And here, the oath-taking ceremony, the grand celebrations are in full swing now. And from the visuals, one can understand how busy the hectic schedule is going to be. As far as Eknath Shinde's position is confirmed, we are understanding that it is most likely he would be swearing in today along with Ajit Pawar and Devendra Fadnavis. Devendra Fadnavis, it's 3.0 for him. Third time he is going to become the Chief Minister. Ajit Pawar, record-breaking sixth time he is going to become the Deputy Chief Minister of Maharashtra. Again, when it comes to Eknath Shinde, a kind of question mark still arises. Most likely, as our sources also confirm that he would be also swearing in. Just to sum it up, we are seeing since today morning there have been several meetings that has been lined up. Even for tomorrow there are meetings, and the better picture on the portfolio allocation would be also coming to fore from 7th to 9th of December.
Okay, point taken. Watching out for that important development, 5:30 p.m. But do plan your travel accordingly. The Prime Minister is visiting Mumbai as well, so perhaps you would want to take care of that. But some of these insurance companies are reversing the move that we had seen earlier, because remember there were earlier reports of those price hikes that they had taken, but for now these stocks are under pressure. Kunal, what's the view on SBI Life, HDFC Life, the other insurance companies?
Not too much bullish on the entire pack for insurance, because many of these stocks have fallen much below their longer term moving averages. So we looked at the price performance for these stocks on a relative basis as well as an absolute basis, where these stocks, for example, SBI Life, the stock which made a high around 1960-65 odd mark, I think is now on the verge of breaking below the 1400 levels, and that's a very sharp kind of a correction, and it's consistent with the pattern of lower highs and lower lows for SBI Life. The stock had broken below its 200 DMA close to that 1570-1600 mark, and since there on the stock has fallen by another 10% plus kind of a margin. So and that too on the back of incrementally higher volumes for SBI Life post the breakdown of its long-term moving averages, which means that the stock will should ideally take a lot of time to recover and get back into maybe a V-shaped kind of a recovery. So my sense is that the stock may either drag for some more time or at least go into a further corrective wave if the volumes start to increase up higher yet again for SBI Life. Same is the case with HDFC Life. The stock had broken below a major support of 700, 720 sometime back, and post that the stock has fallen by another 10% downside. ICICI proves the only stock which is still holding up above its 200 moving average on a relative basis. So maybe that stock can be considered to be a slight stronger candidate or a leader in terms of the entire insurance pack. But then when you have two of the other heavyweight names which are fallen below the long-term moving averages, and in the best of the market bounce back, these stocks have been unable to show any major bounce back. So I would probably believe that the entire sector could get into a corrective phase further.
Right, okay, let's get in some BTST trades as well on that note. Naresh, what's on your list?
So first would be a buy on Kotak Bank. The stock has not rallied as compared to the rest of the names. So stop loss at 1760, target price of 1800 plus. Second would be a buy on Birla Soft, that is also on verge of a breakout near 610. Stop loss at 600, target price of 625.
So those are the BTST trades from Naresh. Kunal, what about you?
I'll go with the buy on M&M. That's a chart which is looking very attractive at current levels of 3000 thereabouts. So would look out for targets in the range of 3200, stop loss at 3000. And TCS is the other stock which I've been very bullish on. So continue to have a bullish stance, expecting the stock to move towards 4600, stop loss for this trade 4400.
Kunal, you've been tracking the charts of Bitcoin closely. It's already above the 100,000 mark. What next?
Yeah, I think much more upside for the asset class still, because I think the breakout which had happened for Bitcoin is a huge cluster breakout. We call it as a consolidation breakout, and that pans out for a period of almost 9 months to 12 months for Bitcoin. That level was around 66 to 67,000 in terms of dollar. We've moved up to the 1 lakh plus mark for the dollar, for the Bitcoin in terms of dollar prices. But I believe that this move should be at least a 40 to 50% kind of a move from that 67,000 mark, which should be almost to that 1,25,000 levels, at least in terms of the technical parlance.
Kunal, not just Bitcoin, but you track equities, of course, and gold as well. What's looking more attractive right now, Bitcoin or gold?
Bitcoin, of course.
Really?
Yeah.
So what are the next levels then?
So what happened is, gold at one point when rupee wise it was 80,000 levels and silver had crossed 1 lakh mark. That was a divergence, huge divergence, which had set in because gold at that point of time was extremely overbought. Same was the case with silver. Bitcoin was underbought or oversold in that sense, and that asset class was looking for a breakout as such. So from there on, from when Bitcoin moved up above that 70,000 odd mark, gold and silver, they started to get into a corrective wave, and then this asset class has moved up higher. I believe that this divergence should continue for some more time. I don't see gold prices moving up back again to that 80,000 mark, at least to a very near term. Dollar denominated, I think it's around 2750, 2800, which is the high for gold prices in the recent charts. And my sense is that the asset should consolidate for at least another 1 to 2 months.
Okay, so the asset will consolidate and see, perhaps some up move as far as Bitcoin is concerned from here on. Nifty, however, is trying to bounce back. We are at 24,750, so not too bad as far as the index goes. But the one big thing that we're watching out for is, of course, the outcome from the Monetary Policy Committee. It will be out at 10 a.m. tomorrow. But what's the street expecting? Let me take it across to Gaurav to get a better sense. Okay, so the expectation is it's going to be status quo this time around. They're not expecting any rate action. Nomura has an anti-consensus call wherein they believe to spur the growth, there is that need of perhaps cutting some sort of rates so that there is that extra liquidity in the system. Let me now take it across to Gaurav. He's ready to talk to us about the street expectations.
When we talk about MPC meet, first let's talk about what has happened between today's MPC meet and the previous MPC meet. We have seen two events actually unfolding. First was that when we talk about CPI inflation, that actually went above 6% level, and on the other hand, when we talk about GDP data, that came to 5.4%, which was actually at a 7-quarter low level and also below GDP expectation which the RBI had kept. So given that inflation is high and GDP growth is low, now the question remains is that is the rate cut is going to happen in this meeting? The answer, when we talk about economists, they believe that 81% of the economists believe that rate cuts are not going to happen in this meeting, and the reason being that when we talk about inflation, that has gone up and beyond 6%, which was actually a resistant level for RBI, and that is the reason why they see RBI will still maintain their status quo when it comes to rate cut decision. They will not cut their rates and they will keep the rates at 6.5%. Now let's not forget that this will be 11th consecutive meeting where RBI will be keeping rates constant, because we have seen the last rate cut actually happening, rate changes happening on February 2023. Other than that, when we talk about some of the liquidity measures, we have already seen that the growth is actually not picking up, and that is the reason why economists believe that other than rate cuts, RBI can go for other liquidity measures like cutting CRR ratio, which is cash reserve ratio. When we talk about this ratio, this was at actually 4% level, which before COVID, which was raised to around 4.5%. So experts believe that we may see 25 to 50 basis point of cut there, and that can actually result into 1 lakh crores of liquidity pushing into the system. Other than that, when we talk about some of the major events like dollar has been strengthening and rupee has been weakening, any kind of commentary on that front is going to be very crucial. How RBI is going to project their growth number as well as inflation number is also going to be crucial, because economists believe that we may see some tweaking happening in these numbers as well. And lastly, when we talk about Mr. Shaktikant Das, his term is getting over on 10th of December. So any kind of commentary, is he going to get extension, or any kind of commentary on that front is also going to be very crucial from RBI. But all in all, when it comes to the rate cut, experts believe that we will not see any kind of rate cuts in this meeting as well.
Okay, that's the word coming in on what the anticipation and expectation is from the MPC meet. Rajat, how do you think the RBI this time is going to sort of do the balancing act of maintaining or rather curbing liquidity as well as inflation?
Score on pretty much everything, because you have, as your analyst was rightly saying, you have a situation where inflation has run up above 6%. I know the GDP numbers were bad, but you can't create better GDP by creating. I don't think we need more liquidity, really. I mean, right now, if you talk about even credit offtake from banks, it's not as if they're in short supply. So I doubt if anything is going to happen. One very interesting thing for me is, if I may just point out of context, is sitting in Delhi, I used to get late coming to my office. We were talking about the arrangements for the Prime Minister to be in Bombay and in Mumbai and the whole oath taking ceremony. How does it feel for so much traffic jams all around you? Because I face it all the time in Delhi.
We all go through that, traffic jams. I know it's a pain, but hopefully the infrastructure will come up next year when that airport opens up and a lot of other of those roadways and metros come on stream. But for now, we are kind of going through that traffic turmoil in Mumbai. But no turmoil as such in the market, because we are back around that 74,700 mark thereabouts. Not back at the highs of the day, but not doing too bad either. In terms of the stock-specific calls, it's of course real estate, which has been doing great as a pack. Naresh, what's the sense on real estate and which is the favorite amongst the pack?
So we have a lot of consolidation happening in real estate. We've seen a decent recovery in some of the names. So DLF is the one which could be interesting. The stock went back to 750, retested those levels. That looks promising, could again go back to the previous highs. And something like Oberoi Realty, if it comes back to 2000, 2050 levels, retest the breakout points, that could be interesting.
Realty currently a little bit under pressure. So is Idea. There's Oil India. Adani Green as well, lower by about 3%. There's Divi's, Cummins. These are all spaces which are a bit of a drag. As is ITC though. Mildly soft, but with a red bias regardless. Asian Paints, Cipla, HDFC Life, SBI Life, these are all the names which are also dangling in the rear as we speak right now. Kunal, what's looking like the weakest sector to you in the market?
So, insurance is one of the sectors. FMCG, autos, I think these are the three sectors which have been huge underperformers. The concern, of course, are the two heavy weighted sectors, which is FMCG as well as auto pack. And in fact, many of the auto stocks are still trading below their, the 200 DMAs. They've not been able to participate or even bounce back by a margin of 5% to 7% at a point when the Nifty is bounced back by more than 1400, 1500 points from the the lows. So which means that we are underperforming not just when the correction was going on, but even in the phase when the markets have seen a bounce back. These stocks have not yet gone through a major bounce back mode. The likes of Hero MotoCorp, Tata Motors, they're still struggling to get back into any major recovery. Bajaj Auto, I think, is the other stock which has formed a very similar kind of a disappointing pattern. The only 2 or 3 stocks which have been relative outperformers from the auto pack, one of them is Ashok Leyland. The stock has bounced back from its sub 220 to 215 odd levels. It's now almost at 230 plus mark. Eicher Motors is still trading closer to 4,800, 5,000 levels. Breaking of the 5,000 mark would be a very big breakout for Eicher Motors. And M&M, of course, which has been a consistent outperformer since the last two and a half odd years. That stock maintains its upward trend about 3,000 levels currently.
Okay, point taken. So those are some of the auto names that one needs to watch out for. Fairly, quiet in the broader markets. Apart from that financial ancillary theme, there aren't many other names which kind of deserve mention at the moment. However, I would want to discuss Tata Power because that one is in focus. It's taking some of the media, media as well as the analysts to the latest plant. It's a large one that they're inaugurating. Plus, they're expected to come out with some other announcements as well regarding the strategic initiatives. Rajat, what's the view on Power right now? Because it had run up quite considerably, then got corrected. Even JSW Energy, CESC, Torrent Power of the world. Anything that you're liking from the private power sector?
Tata Power is one stock that I like because it's available at a reasonable valuation compared to the others. So if you look at the government power generation companies, SJV and NHPC, I like those stocks at one time purely because of the dividend deals. I had those in my portfolio. I've actually sold those. But Tata Power from the private sector power companies, I believe, last check was trading around 36, 37 price to earnings multiple, and that seems to offer the best value within the private players. That is that. Having said that, I don't have any power stocks in my portfolio right now because I think power stocks have run up a lot. So when I reshuffled my portfolio, the whole rebalancing act was to come out of some of these sectors. And on that line, consumption, which is struggling, is a sector I really like. So, the likes of the stocks that you've discussed, ITC and Tata Motors, the stocks that I like. So that's what I'm adding.
Okay, Rajat, good to have you on the show as always. And we better run from here because we've got to wade through all that traffic today. And you just reminded us of that. But Kunal, Naresh, we'll thank you as well. And I'm going to hand it over to Snehi for all the closing trades.
Absolutely, it's been a stellar trading day coming for us because till the first half of the trading session, it all seemed very bleak. We were in fact in the red, but it's been a complete turnaround coming in from that point because what a recovery we've seen coming in on the Nifty today, trading above its 100 DMA. It's been a massive 1.8% uptick coming in from the day's lowest point. That was roughly 24,295. We are at 24,727. So it's been a very massive gap run up that we've seen on the Nifty today. The same can be said for Nifty Bank. Nifty Bank also stellar moves coming in. Sensex also in tandem 1.1% higher is where Sensex is poised to close for the day as well. If you take a look at the broader markets today, broader markets have done well, but they have underperformed the benchmarks because benchmarks have seen some rally coming in today, some stellar rally coming in for the benchmarks today. Nifty mid cap up 0.6%, small cap also largely in tandem with the mid caps. Let's take a look at some of the individual sectoral gainers and losers then. You had the likes of the IT stocks that were abuzz today. So Nifty IT is your top sectoral gainer, more than 2% gain coming in. All the constituents from the Nifty IT pack were in the green, the likes of TCS, Infosys, LTI, Mindtree, Wipro. Persistent on the back of that brokerage note coming in. So positive moves coming across the IT pack, followed by Auto, Nifty Bank, FMCG, Metal, Energy, Pharma in that packing order are your top sectoral gainers. What did not do well today in terms of sectors today? Nifty Realty was the one that was lagging behind in trade today. Prestige, Godrej Properties, Oberoi Realty, Sobha, Mahindra Life Spaces, all of these stocks were trading with cuts today. You also had a Nifty PSU Bank that was slightly under pressure. Remember, it was the top sectoral gainer yesterday. It's the second most top sectoral loser today. You have the likes of IOB, Central Bank, UCO Bank, Maharashtra Bank, all of them trading with very deep cuts today. Some other pockets of value where we did see some action coming in today was Zomato and Swiggy. That run-up continues on these stocks, and today it was on the back of a CLSA note where they have a very bullish call coming in on Zomato, target price of 370 rupees. Remember, Zomato today for the first time ever crossed the target price of 300 rupees per share, and very good moves coming in for Zomato, a fresh high coming for Zomato as well. You had Hyundai Motors that was in focus on the back of the price hikes that they have announced. BofA, however, continues to initiate their underperform rating with a target price of 1840. So Hyundai in fact seems to have recovered because it was largely trading with cuts throughout the trading session. Indus Towers and Vodafone continue to be in focus on the back of that stake sale by the parent news coming in. You had NBCC on the back of an order win, Bharat Forge on the back of a QIP, and lastly you had CLSA on persistent systems like I mentioned earlier. So that stock has also held up pretty smartly. But well, yes, this is how we are shutting shop for the day, above 24,700. And who had imagined at the start of the day that we'd be wrapping up like this? But well, all's well that ends well, and that's what it's like for the Nifty today.
If you like this video, then like, share and subscribe to ET Now.